Have you ever noticed something strange in the AI stock market? Whenever investors talk about AI, most people immediately think about NVIDIA. But behind NVIDIA, there's a hidden battle happening between three companies that are building the actual infrastructure powering the AI revolution: SMCI, Dell, and HPE. Now here's the crazy part. One of these companies could potentially deliver much bigger returns than the others over the next few years. But which one? And more importantly, if you only had money to invest in one AI infrastructure stock today, which would you choose? Stay until the end because my answer might surprise you. And trust me, it's probably not the stock most people are expecting. Before we start, remember this is not financial advice. Always do your own research before investing. Now let's dive in. To understand this battle, we first need to understand what these companies actually do. Everyone knows NVIDIA designs the chips, but NVIDIA chips are useless without servers. And that's where SMCI, Dell, and HPE come in. These companies build the systems that hold, cool, and connect AI chips together. Think of NVIDIA as the engine manufacturer. These companies build the race cars. Without them, AI data centers simply cannot function. This market is exploding because companies worldwide are spending billions of dollars building AI infrastructure. Microsoft, Amazon, Google, Meta, all of them need AI servers, and demand keeps growing. So let's start with the company that has probably generated the most excitement recently: SMCI, Super Microcomputer. This company went from being relatively unknown to becoming one of Wall Street's hottest AI stocks. And there's a reason. SMCI specializes in high-performance servers optimized for AI workloads. Their biggest advantage? Speed. They can often bring new AI server designs to market faster than competitors. When NVIDIA launches a new chip, SMCI is usually among the first companies ready with compatible server solutions. That speed has helped the company grow revenue at an incredible pace. Investors love growth, and SMCI has delivered exactly that. But here's where things get interesting. High growth often attracts high expectations. And high expectations create risk. If growth slows down even slightly, the stock can become extremely volatile. We've already seen massive price swings in SMCI. Some investors love that opportunity. Others find it terrifying. Now let's move to Dell. Most people think Dell only makes laptops. That assumption could be a huge mistake. Dell has quietly become one of the biggest enterprise AI infrastructure players. The company's advantage is scale. Dell already has relationships with thousands of enterprise customers around the world. When businesses decide to build AI systems, Dell is often one of the first companies they call. Why? Because they already trust Dell, and trust matters when spending millions of dollars on infrastructure. Dell's AI server business has been growing rapidly. The company also generates strong cash flow from other business segments. That gives Dell stability. Unlike SMCI, Dell doesn't depend almost entirely on AI excitement. This diversification can reduce risk, but it also means growth may not be as explosive. Now let's talk about HPE. And honestly, this is the stock many investors completely ignore, which is exactly why it deserves attention. HPE has been investing heavily in enterprise AI solutions and high-performance computing. The company also owns valuable technologies. Through years of acquisitions and infrastructure development, HPE focuses heavily on large enterprise customers, governments, and research organizations. These customers often sign long-term contracts, and long-term contracts can create predictable revenue streams. The problem? HPE sometimes lacks the excitement factor that drives retail investors. When people search for AI stocks, they usually don't rush to buy HPE. But sometimes the market rewards boring companies, especially when they continue executing successfully. Now let's compare these three companies side by side. SMCI offers the highest growth potential. Dell offers a balance between growth and stability. HPE offers value and potentially lower risk. But here's the twist. The stock with the biggest upside isn't always the best investment. Many investors chase growth. Few focus on valuation. Imagine two companies growing at the same rate. If one is already priced for perfection, future returns may disappoint. That's why valuation matters. At various times over the past few years, SMCI has traded at significantly higher expectations than Dell or HPE. Those expectations can create enormous upside, but they can also create painful downside. This is where many new investors get trapped. They buy the hottest stock after it has already skyrocketed, then panic when volatility appears. Successful investing often requires patience, not excitement. Now let's talk about price targets and predictions. Remember, these are personal opinions based on current trends and should never be treated as guarantees. If AI spending remains strong over the next few years, I believe SMCI could potentially deliver the highest percentage returns because of its direct exposure to AI server growth. However, it may also experience the largest corrections. Dell could continue benefiting from enterprise AI adoption while offering more stability. And HPE could surprise investors if AI infrastructure spending accelerates faster than expected. My personal view, if I wanted maximum growth potential and could tolerate volatility, I would lean toward SMCI. If I wanted a balanced investment combining AI exposure with business stability, I would lean toward Dell. If I wanted a potentially undervalued turnaround opportunity, I would consider HPE. But here's the biggest question investors should ask themselves. What matters more? Maximum upside or sleeping peacefully at night? Because the answer might determine which stock fits your portfolio best. And this is exactly where most investing mistakes happen. People buy stocks that don't match their risk tolerance. Then emotions take over during market turbulence. The smartest investors understand themselves before they understand stocks. Now imagine this scenario. 5 years from today, AI infrastructure spending has doubled. Data centers are everywhere. AI applications power almost every industry. Which company benefits the most? SMCI, Dell, or HPE? Nobody knows for sure. And that's what makes investing both exciting and difficult. The future is uncertain, but the opportunity is real. Before we finish, I want to hear from you. If you had $10,000 to invest today and could only choose one stock, would you buy SMCI, Dell, or HPE? And more importantly, tell me why. Drop your answer in the comments because I read every comment and I'm curious to see which stock wins the audience vote. If you enjoyed this analysis and want more AI stock breakdowns, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss future investing opportunities. Thanks for watching, and yes, join my Facebook page as well. See you guys.